Hi and welcome to Westpac's end of market day report for Thursday, August the 11th. A bit of a sort of U-shaped day. We saw, on the stock markets at least, we saw European markets taking their lead from Asia, actually opened stronger, with some recovery in the stocks that were absolutely hammered yesterday. But then those French banking stock concerns reasserted themselves, and we saw the French market initially and then other markets turn quite sharply negative. The range on the day, for example, on the average continental stock market was around 6% from peak to trough. But then the US session came on. We saw some a little bit better than expected weekly unemployment figures out of the US. They showed a dip below 400,000 in terms of people registering for unemployment insurance claims for the first time. That's an indication that even though the labour market might be soft, at least it's not necessarily because people are being laid off at a faster pace. That gave some sense of security about the US economy, and that, coupled with some decent results out of Cisco Systems and News Corp, meant that US markets were pretty much in positive territory for most of the morning session in New York. It's now coming up to 5:30 in London, so lunchtime in New York, and where we are at the moment is that the Dow's up almost 2.5% at 10,984, and in Europe the FTSE's up just over 3%. The French market's doing pretty well too, up 2.9%, and the German market's up 3.3%. Those positive outcomes, at least so far, we've still got 3 or 4 more hours to go of US trading, do belie the volatility intraday, and certainly in terms of the banking sector, the cost of insuring bank debt was very volatile today. There are also some stories coming out that might have had some impact. Rumours that the Italians and the French might ban short selling in their markets. The Swiss National Bank talked about possibly putting in place a temporary peg against the euro to prevent unwanted Swiss franc appreciation from continuing. So a few little stories just worth throwing in there too. On the US data front, I mentioned the lower claims number, but also we did see a wider trade deficit. Exports fell around 2%. There was a smaller fall in imports. That means that not only did the trade deficit jump to about 53 billion, the highest it's been for since I think 2008, but it also could lead to a downward revision to the contribution of net exports to the Q2 GDP numbers. They were weak enough as it was. They could be revised a bit lower on that basis. Turning to other markets, on the commodity front, mostly positive today, with copper prices actually up 3.4%, oil up 0.4%, $83.22 a barrel at the moment, and gold gave up some of its safe haven status. It's currently at $1,762 an ounce, down around 1.2%. Aussie dollar, it's at 1.027 against the US dollar at the moment, sort of towards the top end of the 101, 103 range, 2 cent range that it traded today. That's about it really. As I say, market's still trading. There's no particularly important major Aussie data to look out for on Friday, your trading session. We've got some more US data to provide a bit more colour on how the US economy is going in our session tomorrow, particularly on retail sales, so they'll be worth watching. Okay, that's it from me for now. I'll speak to you again tomorrow.